So everyone, pay attention. This is how you spread a file globally, okay? This is a live deal for a company called Pronto Shipping and Packaging Services. What I'm going to do is I'm just going to spread the most recent business tax return and the most recent personal tax return in the interest of time to come up with a debt service coverage ratio for the business and globally. So what we want to do is we want to start by coming over here and putting in our loan amount. So this one I know is a $500,000 working capital request. So I drop that in here under my sources and uses, brings the loan amount right here. The interest rate, always double check that you have the right base rate and margin. I think these guys are actually prime plus 3. So I'm going to update this to prime plus 3. So the rate is 11.5. So you see here, the payment here is just over $5,000 a month. Next, I'm going to come to my business spreads. So I'm going to type in my sales and revenue, which I'm grabbing right from the top of the tax return. Then my net income is going to be the one all the way down here. So here's my total income is right up here. And then my ordinary business income, otherwise known as the net operating income, is that bottom line piece. So I'm going to drop that in. Now I can add back my interest, depreciation. I'm only going to add back rent if it's a CRE purchase. So I'm really just looking for the interest, depreciation, and amortization. In this case, they've got $26,000 in interest.
Well, hey, real quick, Bert, not to interrupt you here, but I saw in your sources and uses, I think you had it at 300 months, but is this not CRE?
It's not CRE, so I will go back. Thank you for that. Make sure you save your template, the one that you use. I mean, I have this stored on my computer. You should as well. And make sure you don't have the auto save on. But yeah, great catch. 120 months is correct. The only time it's 300 is if it's commercial real estate involved. So thank you, Bill. Appreciate that. All right. So my business spreads. Now I'm looking for depreciation and amortization. They have no depreciation here. The only place I can find my amortization is under the other deductions. So they got $2.1 million in other deductions. I want to go find that, which I'm going to look down at the bottom towards one of the schedules. You always want to pay attention up here on this top line here. See if there's anything listed under other income. Right now, there's not. So line 5 here, you see other income. Always pay attention to that because sometimes you can have things that are like revenue producing activities of that company. For example, they got a grant from the city, or like they got a PPP loan, or some kind of handout that they received. That could go under other income. So if you see that listed here, scroll down and just take a look at what the supporting statement shows, and then ask some questions of your client to make sure that we don't have we're not counting income that's not really revenue. So if you have other income that was a grant or something to that effect that we would need to add back in, then that's what you have to do. So you would then like deduct it from this bottom line. So I'm going to keep going down and look for my other deductions of $2.1 million. I can scroll pretty quickly because I'm just going to get to this list here that's got all this stuff. So boom. So I'm just looking for amortization here. I don't see any amortization. So I'm good. So, I mean, that's it. By the way, I just spread the business. It's really not that complicated, okay? So now what I have to do is you look right now, before I've added in any debt of that business, I'm at a 7.82 DSCR. Well, I only need a 1.25. So I'm doing really, really well right now. But I have not done the debt schedule yet. So let me come over to the debt schedule. And what I'm going to do here is I'm just going to list all of the debts that are not being refinanced with this loan. So I'm just going to come in here. I really just care about the monthly payments right now. So I got 2,400, 25,000, 10,000, 59, 40, and 2451. Okay, so these guys got a
my own knowledge. Like, there's yes next to refinancing. So would you usually not put that there?
I would only indicate if it is being refinanced with the loan. So,
Okay.
like as an example, they might want to refinance this DDL equipment loan, $400K with a $10,000 monthly payment. Like they might want to refinance that.
I just saw yes on those three. I don't mean to cut you off, Burke. I was just trying to watch. All right.
Yeah. So, if they do want to pay it off, which they did indicate 1, 2, 3, that they do want to pay these off. Okay. We certainly could. So, I could indicate these. Now they owe 400,000 on this, 46,000 on this, and 140,000 on that. They're not going to get to, like that's more than 500 grand. So maybe we just refinance the DDL and the Upstart, and we give them the rest in working capital. If we're going to keep it, at let's say a 500K loan. If they want 350, then you can't refinance anything, right? So, like we have to know the program that they're applying for, or we need to know what they could potentially qualify for. Someone might apply for program X, but they're not eligible for program X. So we've got to switch into Y. So part of our job, it's like a puzzle that we're trying to solve here. Like, what could we do? Can this customer qualify right now without paying anything off for the 350K working capital expedited loan program? And that is the analysis that I'm presently doing. I'm not even paying attention.
Even though they say yes, you're saying if they could do it all. My apologies. Okay, cool.
No reason to apologize. I just really, for right now, I'm just trying to show people how to spread, and then we can always go back in and we can mark this off as refinancing. So I'm just going to kind of keep going through here and showing the rest of the tabs. So now when I come into the, where am I? My business spreads. Okay. So now look, I thought I was great. I thought I was golden. I was like, oh man, I'm at a 7.8 debt service coverage ratio. Well, actually, they got $550,000 a year in debt. So I'm really not at a 7.8. I'm at a 1.04. So that tells me right now that, they're probably not going to be eligible. Now, I could put this at 350 instead of 500. I just want to check and see if they could potentially qualify at a 1.2. They're not going to. They're not going to. These guys are not going to qualify for the Fast Track Plus. Even though they had $600,000 in free cash flow, they have a lot of debt. Okay. So I'm going to put this back to 500,000. And I'm going to continue on with the guarantor spreads. So now I'm going to go to the guarantor tax return. And I'm just going to start dropping in numbers. I'm starting with page 1. I'm looking at my W-2. He's got 117,000. The analysis is simpler because it's just one individual on this tax return. If I have a spouse, I need to understand, is that W-2 income, does any of it belong to the spouse? Sometimes the tax return will give you some clues. Other times we need to actually request a W-2 or W-2s so that we can really fully understand it. So now I'm going to drop this in. 117,800 is what they did in wages. Before I go too far, I just want to double check my global and make sure I'm doing it under the right thing. Okay, I'm going to go back here. I think I actually put the first thing in under, by accident. I put it in for 23. It was actually 22 numbers. I put it under 23 by accident. So now what I'm just going to do, just for the purposes of this, is I'm going to keep this under 23, even though it's actually 22. So I'm putting in the wages. Now I'm just going to look and see if there's anything else going on. Any other income that I might be able to use. And the income I'm looking for is really like long-term income that could potentially continue. I'm not going to be able to count anything that's not likely to continue for the next 3 years. So I'm just kind of going down and I'm looking at what else I got here. Okay, so I got a rental property. That rental property shows a loss of 25.62, but I've got depreciation of $8,000. So what I can do here is I can take my minus 25.62 and I can add to that the $8,000 of depreciation, which is a non-cash expense, to get me to a positive 54.38. So I'm going to come back over here. I'm going to go to my Schedule E rental property income net, and I'm going to say that's going to be 54.38. Okay. Next, what else do I have? All right. I've got Pronto shipping and packaging service. Well, that's my borrowing business. I'm not going to use it twice because I already spread this. So you don't ever take the K1 from the borrowing business and use it again on the global, because that would basically be counting it twice. So now what I'm going to do is I'm going to look at what else did they have? Well, they have another business that they made $23,065 on. So I'm going to drop that in here. So that was a partnership distribution not related to our business. Okay. And I think that's just about it. I think that's all they got. These are like deductions and stuff. I mean, I'm really looking for, is there a Schedule C and is there a Schedule E? And I'm going to drop that information in. So it'll mostly tell you on page 1 what you got going on. Wages, and then other income from Schedule 1, line 10. I already found that Schedule 1, line 10. So it's that 633 plus $23,000. So I've got my income here. Now I need to look at the taxes. So the best way to look at taxes is just to look at what he actually owed. So look, in this year he owed $206,265. Okay, it's a lot. 206,265. It's a lot of taxes. He's in Texas, so there's no state taxes in Texas. I happen to know that, but you can always do a quick Google search for the state and, see if there's taxes that are owed, that someone has to pay if they live in a state. Do they have state, income taxes? Texas, there's none. Florida, there's none. Most other states, they do have them. So what I would suggest is just take 10%. I think that's like a really fair number. Take 10% of the adjusted gross income. So the taxable income for this guy was $677,000. He had a lot of taxable income. So anyway, I've got my federal taxes in here. Now my living expenses is going to be $12,000 per adult, $5,000 per child. So now I'm going to come back to page 1. I'm going to see, well, he's only got himself listed on here. He's showing head of household, and he's got 1 child. So I'm going to put in $17,000. Okay. Look at that net cash. Whoop, he's in the red. Now I need to look at the credit report. So this is the last piece of the puzzle, is I'm going to look at the credit report and I'm going to see really just the summary page of what's going on here. So $11,081 a month is what he has. That's what he's got. $132,000 a year in debt. If I need to, later on, I can always go back and I can look at the actual credit report to see if there's anything on here that maybe would be appearing on the personal or on the business. So I'll tell you right now, I'm seeing Upstart. It's a business loan personally guaranteed. I'm also seeing Houston Business Development. It's another business loan that's personally guaranteed. So I can tell you right now, I can back out this Upstart because it's already on the business debt schedule. I don't need to count it twice. My business debt schedule has Upstart. It's right here. It also has HBDL. That's going to be the Houston. It's going to be the Houston Business Development Loan. So now I'm going to back out 5936 and 366 from my analysis because I don't need to hit them twice for it. So I'm going to back out 5936. All I do is I'm putting this in a parentheses. And then I'm going to put in parentheses $366. Okay. I just spread it global. I just spread him personally. So now I'm going to come over to the global tab and I'm going to see what's going on for 2023, even though I know I spread 22, I put it in the wrong column. And let's see what's going on. I've got a personal DSCR of minus 1.34. That's not good. I've got a business DSCR of 1.04. It's not great. It's okay for a standalone 1.0 with Chloe. And I didn't do anything with affiliates. So my global is a 0.84. So now I got to go back to the drawing board because this thing is not working right now. I have not yet indicated any of these debts to be refinanced with the loan. But I know that this person said that they would like to, if they could, they would like to refinance the DDL, the Upstart, and the HBDL. So DDL is $400,000. Upstart is $46,000. And this HBDL is $140,000. I'm just putting in everything at this point. 3.7 million on an SBA loan. And then current balance on an EIDL. It's not eligible to be refinanced. 489,000. All right. So now I'm thinking to myself, well, what can we do here? If I refinance this 400K debt, right? That's $120,000 a year I don't have to worry about. And then what if I also refinance this $46,000 debt? Okay. So now let me come back to my global and let's see what's going on now. Oh, well, wow. Look, now I'm at a 1.49 business. I'm at a 1.16 global. Okay. I might be in business right now. So, the way I would approach this is I would probably say, look, we got to go ahead and also get this thing taken care of right here. This $140K, $2,400 a month. Let's take care of that also. Total amount here is $586,000 that this customer needs to refinance. So I would probably make this a payoff debt of $586,000. That's my analysis. So I'm making it a debt payoff of 586. Let's say there's 20 grand in closing costs, roughly. I got a loan of 606. This is not going small balance. But I'm coming back over here. Let me go back to my global. And I see I got a 1.5 business. I got a 1.19 global. This thing's going to be really close. I think I have it at prime plus 3. If we go over 500K, we very well might be at prime plus 2.75. I'm at a 1.19. Gosh, this is really, really close. I may find a lender willing to take this. Especially if there's collateral.
Out on the 5 million though.
That's a good question. So they've got 489,000. So what Angela's saying is, well, aren't they gonna not have enough SBA eligibility left? Because for $5 million. So 489 plus 3.7. So they're at 4.1. So if I do another, if I do another like $608,000, they're going to be within their, their limits. Now these are 22 numbers. So, I'm probably coming back and saying, hey, what's going on with 23? Like, where are we at, with 2023? Do we have those yet? Do we think we'll have them soon? They might have to file 23s in order to be, in order to be eligible. But Dan, this was your deal. Is this did we get anything back from Chloe? Did this go up? Did we get is this a standalone or a prime? Do we know yet?
So this was a global.
This was a global.
Yeah.
All right. So here's what's interesting with Chloe is when they do globals, they're okay down to a 1.0. So, I would, if you want to send this to Chloe, which is not a bad idea at all, let me come back to my pre-qual template. And let me come over here. Let me drop this back down to 500 grand. Oh, really, it's going to be like, whatever we can get out of it. I'm just going to make it 500 even. Let me come over to my debt schedule. I can't pay this off if I keep it at 500 grand, right? They owe 446 on these two. These are going to be the two biggest bangs for their buck right here. So now let's come back and see, what am I looking at on my global? Well, I'm at a 1.49 business. I'm at a 1.17 globally. So I'm good. I'm good with Chloe. 500 grand. Based on 22s, I don't see 23s in the file. So, that can have a massive impact. Massive. The lender is always going to use the lesser of the two, the worst case. So think of P&Ls as something that can only hurt you. It can't help you. Think of P&Ls in that, in that perspective. So we have this deal, we just spread it. We're like, all right, I think this is worth working on. I think we got something here for 500K, but I haven't seen 23s yet. They had a lot of profit from 22, and you see what the numbers are. So if they only showed 300 grand in net income with not a lot of add backs, this thing might not work, right? So we're going to have to spread the 23 P&L, and we're going to need to understand the 23 W2s and drop those in as well.
And hope they still have that same income.
And hope they still have that same
income.
Exactly. Yep. Angela?
You know what? I didn't have a question. It was going back to clicking on the refinance of this debt.
Got it. Sherelle, you have a question?
Yes, I needed to get some clarification on as far as if it's a state that does require taxes. Were you saying that if we don't have the state tax return, we should estimate what number to put in there?
Absolutely. And, you know, you can really, if you want to do it properly, okay, here's what you would do. You would Google, let's say they were in Connecticut, right? I would Google Connecticut state income tax rates. And, you know, I would come up with, so I'm just going to do it right now. Connecticut state income tax, you know, brackets basically, is what, you know, is what I need to know. And so now I can come in and I can see I just found it on their state website. So look, this is Connecticut. Oh, that's not really great.
Yeah, there's only 5 states that don't have tax. I believe it's South Dakota, Alaska, Tennessee, Florida, Texas. I think that's.
So sometimes you'll come across something like this, like you'll come across a, you know, a calculator. And what I would do is I would come back. I would come back to my personal tax return and I'm going to look at what the taxable income was.
I can't see your screen.
Oops. Let me share my screen. Okay. So I would come back to my last filed PTR and I'm going to look at the taxable income. This guy he had $677,000 in taxable income. Now, I would then come in here, 677,711. And estimated state tax, 43,972. There you go, Connecticut income tax calculator. That's how I would get that additional dollar amount. And then what I would do is come over to the guarantor spreads, and now I'm dropping that right here. And that can really change things big time. So if I had 43,972 here, let's see what that does to my global. I mean, I'm still at a 1.08. So I'm good to a 1.0, but this is where we need to understand our lenders' requirements and guidelines. Chloe's okay with a 1.0 global, I think. Someone correct me if I'm wrong, but I think she's okay with the 1.0 global, as long as the business spreads. So in this case, that's what I would do there.
All depends on how low that E-Tran is in the global. And she's got some levels to that when it's under 155 on what.
Yeah,
You know,
she's at a 1.1 on 135 to 144, and she's a 1.05, 145 to 154.
Got it. So it's the level of E-Tran. Does anyone know if she's over 155, what that is at a 1.0 if it's over 155?
I'm looking on her
It is.
spreadsheet. Yeah.
It is. Okay. If someone could circulate that after the call, please, so that we all have it handy, that would be much appreciated. Thank you. Pat, you have a question?
When you added in the income from the affiliate business, does that open up the conversation of spreading that affiliate business and you need to collect those documents as well? Or can you just...
Yeah, great question. Very good question. So what Pat said is, if you see there's a K1 from an affiliate, do you need to spread that affiliate? Well, the answer is going to be the classic SBA answer, which is it depends. It depends on where it's going, because some lenders don't do a full analysis of the affiliates, and some do. I can tell you in the example of iBusiness, they don't. So the, up to 500K, I think there's going to be a little more flexibility. Anything over 500K, you're going to absolutely, that affiliate's going to need to be spread. Yes. So in that instance, we would need tax returns for that, 3 years of returns for the affiliate, debt schedule for the affiliate, and then we do that, we do that entire exercise. And I'll show you all where to do that. So on this tab, you can come under affiliate spreads and you can just drop in your information for that affiliate. So that's how you would, and you can do multiple affiliates here. And then over here, this is where on the affiliate, this is where you would have your debts that you would drop in. So yeah, on a fully underwritten 7A loan over 500K, you might have a customer that has an affiliate that, their tax return showed okay, but I'm using a 22 tax return and they've loaded up on debt since that time. So that would need to be looked at. I think for the purposes of what our group is doing, I really want for us to be able to understand at this point in our career and where we are right now with the amount of SBA that we're doing, is to understand how to spread a deal globally, looking at the last filed tax return and the interims. So I want to show everyone just real quick. I know we ran over a little bit here, but this is important stuff. I want to show everyone here real quick of how we would spread the interim. So let's say you've got a P&L that only covers, 2 months, right? And the sales were, I don't know, let's say they were 800 grand. And they said the net income was 100 and let's say it was 100,000 in net income. And I had 2,500 in interest that was added back. Okay. So what happens is the lender is going to look at this on an annualized basis. So we would have to actually go to the P&L, see what date the P&L is good through. This is going to be our interim. And it's always good to have a P&L good through the end of the month, because you can't really spread like a partial month. So if someone gives you like through 3/15, just tell them, look, give me through 2/28 or 2/29 this year. It's going to be a lot easier. And you're going to drop in those numbers, and then this is going to be looked at on an annualized basis. So you've got $102,000 for 2 months, which is basically 51 grand a month. So the spreadsheet is going to then look at that on an annualized basis. It's also going to look at the 7A loan on just during that period. It's going to look at the debt of the business and look at it just on that period. So you see here, as I'm coming in, my DSCR is starting to go down for the business. It's a problem. We can't manipulate the numbers for a business. Like, we're not going to take a P&L and change it or modify it. I think that goes without saying, but I'll say it anyway. We also can't tell the business owner, hey, like, make something up and give me a P&L that works, that cash flows. We can't say that. What we can say, though, is that, hey, I'm looking at these numbers and it looks like you're way off, so far this year. Are you sure that P&L is accurate? Is there anything that's in there that maybe, is more personal in nature, or more of like a tax kind of write-off that, like people write everything off. Like they renovate their houses and they try to write that off. So like if you have that on your P&L, because you maybe aren't going to pay Uncle Sam on that, like, and it's not a legitimate business expense, give me something that looks really reflective of what your business is actually doing so far this year. In the case of iBusiness and Colony Bank, up to $500,000, there is zero flexibility here, folks, zero. So they will take the worst case scenario of the two. If the P&L looks worse than the BTR, they will use the P&L. Now, with other, more fully underwritten over 500K 7A loans, the lender can ask some questions and they can say, all right, well, we're only 2 months into the year. It's the winter time, and you're a pool and landscaping business. Like, yeah, of course, you don't really have much sales. So now they might say, listen, can you go back and get me the P&L covering January and February for the last 3 years, just so we can have an idea, like, is this in line with what we've seen in the past? So just be on the lookout for that. I would advise everyone, just don't send a P&L back if it's spreading worse than your BTR spread. Okay. Go to your lending officer first, processors, lending officers, ask some questions, come to me if you need to. The lender cannot unsee something once you send it to them. So we have to make sure that we are doing our diligence. Any questions before we wrap up? Angela, do you have a question?
Oh, no, I was actually just thinking if that affiliate business had SBA debt, we're in big trouble.
Potentially. Potentially. Cool. Well, I hope this was helpful. We can continue to do more of these exercises. What I encourage everyone to do is practice. You're not going to be an expert on this, day one, but you've got to go through the exercises to spread globally. And when you have examples and maybe the lender comes back with something different than what you calculated, or maybe you're looking at something and you say, hey, I don't know, can I use this? Can I not use this? Just ask me. It's easy. I can look at this stuff real quick. Ask your lending officer, and if he or she doesn't know, come to me. It's not a big deal at all. But this stuff is going to take practice. But we have to do it, right? So what we can't do is just send something into Chloe and she says, this thing doesn't spread for any dollar amount. Like, you have to be able to stand behind your work. So you can't just send something in where it's like a 0.62 DSCR and expect they're going to get a $500,000 loan, and they can't even qualify for a $100,000 loan. It's like, well, that tells me that you didn't look at anything, that you didn't even try to spread it. So the expectation is that you're going to try. I don't expect everyone to be perfect, but I do expect that you're going to try and that you're going to continue to get better over time.
I think my question is when doing the interim financials, there is nothing on our spreadsheet for interim personal income, and I don't know how that's calculated. Does it need to stay consistent like for the previous year, because there's nothing on our spreadsheet for that?
So oftentimes the lender doesn't ask for, sometimes they will, like if it's over 500K, they might look at that. We don't have that presently on our spreadsheet. So we're just kind of going off of the last tax year, the full year. So we're trying to get this spreadsheet sort of redesigned and better digitized so that we can like just drop stuff in quickly. And so we can look at trying to do that. But right now we don't have the ability to look at, the interims for personal.
But we are looking for that, because if we're having to use the personal income, like W-2 income, to qualify for global, then we are going to have to calculate and make sure that they still have W-2 income right now and get their year-to-date pay stub, correct?
Yeah, so we would want to get a year-to-date pay stub. Absolutely. We would definitely need that. So, and you want to look at that year-to-date pay stub as in, most business owners, they just kind of set themselves on a salary and it is what it is. But if you have a business that like, oh, I didn't pay myself anything this year, well, that could be problematic for sure. Awesome. Well, we will wrap up on that note. Thank you all for your time. I know it's very valuable and, we went a little over here, but I think this was really useful information. So happy hunting. Let's go Fast Track Plus. We'll talk to you all later. Have a good rest of your day.
Bye, everyone.
Bye.
Bye.
Bye.